Welcome back to Yahoo Finance Live, everyone. As we continue to track the state of the housing market, home prices in focus here today. As the January U.S. home price growth was 19.2%. We're going to dive further into the exact metrics in a moment, but take a look at some of the movement that we've been tracking here for home builders. As we've been tracking across both new homes and existing homes, of course, data has already shown that existing homes inventory has continued to drive some of the prices of those existing homes that are on the market higher. Meanwhile, it's been hard for some of the new home builders out there like a Lennar, like a Toll Brothers, to actually execute because of supply chain crunches as well. However, you're seeing all of these companies move higher, including the ETF that tracks the S&P 500 home builder segment, the XHB, that's up on the day by about 3% on this news. We're going to go further into this data in just a moment. David?
Thank you, Brad. Let's talk about all that with Debbie Boyd. She is the CEO of DLB Financial Services. Debbie, nice to see you. Brad just showed us those numbers, 19.2% in January year over year. That's up from 18.9. How long can these prices stay so hot? And what are your other big takeaways from the report?
Well, I do think it is indicative of what's going on in the market. We've got that perfect storm right now. We've got COVID that did the supply chain problems. We did COVID that drove people to work from home. Now companies know that people can work from home. People know that they can work from home. Now they're moving. They're moving to states that have lower income taxes, if any. They're moving to states where their families are, or they're just moving to states that are prettier and they want to be in. Now that you can work for anywhere, it really has changed the game of employment.
What are specifically those hottest markets? And is there one particular common thread among them? You mentioned some of the possibilities. Could it be jobs? Could it be taxes? Could it be weather? Could it be a labor market?
I think it's all of those things. I think, I'm here in Dallas and we have a lot of people moving from everywhere else but here. So our people are sitting still. Everyone else coming in, Chicago, Atlanta, New York, Boston. And then we've got the West Coast. We've got people from Washington that are cashing in those expensive homes and buying twice what they can buy up in Washington or in California, pocketing the money and investing it or buying rental properties. So it's really a great time to move your money around in different types of events that you maybe couldn't last year.
The three hottest markets, Phoenix, Tampa, and Miami, up 32, 30, and 28% respectively. How do you expect that mortgage rates on the rise will impact the market?
The prices going up are one thing. Another thing is those interest rates. So when the interest rates go up, it's not going to deter you from buying. If you're going to move, you're going to move. But it just means that you're going to get less house now than you could last year by quite a bit of percentage. So yes, can you move to Miami proper? Maybe not. Maybe you can't afford to be in the city now. The prices are 30% more than they were last year. So you're going to be in the suburbs of Miami. It's going to change the way that we live, and it's changing the way that we're using our money. A lot of people are cashing out of their 401ks and investing that money into real estate, while you have people, on the other hand, moving money from the stock market and they're putting it into real estate with investment properties. So we got a lot going on right now.
In terms of those mortgage rates, how high do you expect them to go? And is there a point at which it will cool off the market?
I think it will cool off in a little while, but not anytime soon. I think this year we're going to see close to 6%. So rates are going up. Just with the Fed talking, they go up a little bit, but with the threat of the Fed talking, they go up a little bit. So we're already a whole point higher than we were in December, and the Fed's only spoke once. So are they going to raise it 7 more times? I don't know, but just the idea that they can raise it if they want to, which has always been out there, but now people are talking about it, the rates are going to self-regulate.
Perfect storm right now with demand so high and inventory so low. And inventory is the big question moving forward. Been relatively flat. And Brad mentioned some of the factors. Why is it that home builders aren't increasing inventory?
Well, they can't in a lot of cases. I'm in suburban North Dallas area where we have all the major home builders build here. And you know what? They're selling 2 houses at a time per month, where they used to be able to sell whatever they wanted. So no, they don't have enough lumber. They don't have enough sinks. They don't have enough electrical boxes. People don't have enough, and there's not enough workers to go around. So yes, you can get your roofing done, but it's going to take longer because the companies are stretched more. a lot of people are not working in the trades like they used to. So there's an extra demand, and he who pays the highest price gets the workers right now.
Great point. The labor market is very tight. So Bank of America said housing affordability is its worst it's ever been. If you are a buyer who's struggling to find something in this market and think, all right, I'm going to wait out this bubble, what's your advice?
It's not a bubble, so don't wait it out. The rates are going to be higher. That means you're going to have less of a house next year. More houses are coming on the market all the time as people try to figure out what to do. But the problem is, if you're going to sell your house, you've got to have somewhere to move. So one guy I talked to today, he's moving out of the country. Great. So his house is going up for sale. Another man's in a 2-story house. He's retiring. He wants a 1-story house, just doesn't want a big 2-story house anymore. So he's going to something smaller. You really got to have a reason to make a move. The equity that you're getting off of it, a lot of people are doing a cash out refinance, paying off a lot of debt, or they're buying investment properties, but they're staying put. So we have reverse mortgages making people stay put, and where are you going to go? So you have to be able to move somewhere to make it worth your while.
And no signs of slowing. Debbie Boyd, the CEO of DLB Financial Services. Appreciate your time today. Thanks.